Welcome to Markets Now. I'm Michelle Rourke with Mark Schultz, North Star Commodity. And the grains leaning lower except for a few of the wheat contracts, while the livestock futures, we actually opened higher, but now we've turned mixed. Cattle still higher, but hogs lower. So Mark, let's talk about corn and soybeans. An update yesterday, we're back down here today. How much of that is profit taking just because we were up yesterday?
Well, we've been kind of a steady diet of being up most of this week. In fact, for quite some time here, it's been just a nice, orderly type of market that's moved to the upside. I think you came into this 505 area on March corn. If you look at the charts, there's going to be some significant resistance there, and I think you just simply ran out of gas. And as the market looks around, you look down at export business has been fabulous for the corn. No denying that. I think your ethanol grind has been there. I think eventually you're going to see lower carryout in the U.S. on corn. But I think the attention eventually goes back to South America, where it looks like the weather has at least cooperated over the last 8 to 10 days, allowing soybean harvest to pick up momentum in Brazil, and also, more importantly, getting the safrinha corn planted.
Yeah, so let's talk about the market right now. I feel like corn is kind of stuck here. We don't go down, and every time we do go down, the market's pretty resilient. The funds buy. But we've been unable to, except for one day, close above the $5 mark on the March contract. I know we're transitioning to May now, but is the market tired?
I think the market futures wise might be a little bit tired. We're starting to see the corn basis firm up. Now, maybe it's as a little bit more of a reflection of the fact that it's been so cold that not as much grain moved. We shall see, but we're seeing the corn basis firm up. We're seeing the bean basis firm up. Like I say, our export business has been very, very good. I think we're going to be fine in that department. You're going to have an Ag Outlook conference next week. That's more than likely going to show that you're going to have more corn acres to the tune, I think, of 4 or 5 million more acres of corn, maybe more when it's all said and done. But in this report, probably 4 to 5 million more acres of corn, probably 2 to 3 million less acres of beans being planted for this calendar year.
Yeah, I was going to ask you if corn was maybe going to start trading that, or when the Ag Outlook numbers were going to start making a difference here. Maybe we're trading them already, because we've seen some private estimates out showing 94 to 95 million acres of corn already, haven't we?
Oh, yeah. And you've had, you look at just where you are, you're setting a price for insurance. So corn's probably right now about 471 average price. That would be compared to 466 a year ago. Soybeans probably right around 1055, 1057. You were 1155, I believe, a year ago. So you're a buck a bushel less on just insurance guarantees for the beans versus the corn, and the corn's a little bit higher. So if you ask the people even down here in the southern tier states, which they'll start planting corn soon, they are definitely looking to switch over to corn, from beans to corn, and also cotton acres switching over and going into corn.
So to keep the rally going in corn, we need a crop problem in Brazil with the second crop corn, right?
We sure do. I mean, and right now it's just getting in the ground, getting planted. There's a few pockets of dryness, which is a little hard to believe, but and I wouldn't call it anything significant yet. But they are going to be warm and dry again another 4 to 5 days, and then the rains are expected to pick up. So they're going to need the rain. If they don't get it, then you're going to start seeing people talk about dryness and issues like that. But overall, to get the wet season to end this early in Brazil is pretty difficult. I think you're more looking to see if the wet season ends early by about the 1st of April. That would be more of the telltale sign for the safrinha corn crop.
So, Mark, the soybean market seems to be kind of trading range bound as well, because I don't know if we're being supported here by the fact that maybe we're anticipating less acres of soybeans, but we can't get much past the 1050 mark either before we start getting some profit taking there. And is that what we're seeing today?
Yeah, the bean market is really kind of just going into a big sideways pattern and not doing much of anything at this point. You get up there to the $10.70 on the nearby beans, and they struggle. You get them back down to $10.30, and they find some buyers in there. So we just kind of sit bouncing around here. And yeah, I think eventually the odds would favor that you're going to see a bean acreage in the U.S. go down. The harvest in South America is probably going to be closer towards in Mato Grosso, probably up in that 75 to 80% complete by the end by this afternoon. What we hear is yields are pretty good in the central and northern part, a little on the disappointing on the yields in the far southern part of Brazil. But overall, it is still going to be a very good crop in both Brazil and Argentina combined will still be well over the 500 million bushels more than what we had a year ago out of South America.
Yeah. And so with that being said, I think the soybean market's actually held up pretty good in light of that. So
I would agree with that. I think the beans actually have done fairly well for in light of what they have in the harvest going on. Our export sales, they're not great, but they're at least doing what they have to meet what USDA has targeted. So I think it's okay on that end. I think we're seeing the meal demand get just a little bit better here too. That's important. I think if you're really going to take the bean market and move it higher, it has to be led by the soybean meal, and so far that has not been the case. So if you get the meal to turn around and start having better strength, you'll have a better opportunity on higher bean prices.
okay, yeah, and soybean exports this morning starting to trail off. We kind of expect that with Brazil's crop coming. What about this wheat market? A little pop today. Is that just fun short covering, you think? Do we have most of this weather news priced in?
I think for the most part, it's just a little short covering on here. We had a couple days on the sell-off on the market, but keep in mind, this market's moved up very nicely as well to the upside. I think a lot of people concerned that did we get some winter kill damage done? I would say for the most part, from what I hear from the clientele, they believe they had enough snow at least to protect it for the time being. If there was an area that may have got clipped, it would be the far western part of Texas. That wheat may have been far enough along to be out of dormancy, and that might have got roughed up down there. But it's still too early to tell, and I don't know that it's a big enough area yet in order to have an impact as far as yield is concerned, because overall the winter wheat crop looked pretty darn good as it went into dormancy this fall.
And the cattle market's trying to trade back higher. It's been a choppy affair here this week so far. We've had a little light cash trade, some lower money by $4 to $5, but the futures are still at a pretty big discount. Is that going to hold that market, you think?
Well, technically, on the futures end of it, it's not so bad. It appears to at least be holding where it had to. If you take the rally up, we've had a 38% retracement on here. We're holding at least for the time being, and yes, they are at a discount to the cash. What the market really has suffered here is the fact that we've had cold weather, lower kill. Packer margins are about $180 to $190 per head in the red in here. They slowed down the kill in hopes that that would at least prop up box beef prices. That has not happened. It has been on the weaker side. Now box beef prices at $312, at 310, 312, some pretty good support on a box beef chart. So hopefully we got something that at least finds some stability and firms back on up on the cattle market. And you are going to get into a seasonal time period. The other thing I think too is that a lot of this cold weather and the winter storms, it's been roughing up the eastern half of the U.S. That's where more of the population is. And I just think that's had an impact of why we just have seen the beef demand domestically slow down just because of the weather being less than ideal to go out to eat.
Yeah, and I would think that the market's disappointed here. You mentioned the packer kill cuts and the box beef has not responded, so that's got to be a bit negative, I would think. What about this hog?
Yeah, and when the Packers are losing this much money, you need something on the box beef price to firm up. I think seasonally you've got an opportunity where that will start to take place.
You bet. We'll get into the grilling season time period. All right, so the hog market, we've had a setback here this week. It's because of the cutouts. They've kind of imploded here, rolled over, haven't they?
Well, the only primal cut that really has taken the shellacking has been the belly market, and that has dropped $34 in 3 trading days. That's a big drop down on here, and that is what's plunged the pork cutout value from 102 all the way down to about 94, $95. So hopefully it finds some stability in here. I would say the bellies were definitely overvalued. but to wipe out $34 in 3 days is a significant drop. So hopefully that turns around. I think the cash, which has been holding up fairly well this week, but if you go back and just look at what happens, typically on Friday, cash is weaker, cutouts are firmer, is how it plays out. So that's what I'm kind of expecting here today. But I still think the hog market has done some technical damage on here. That's the nervous part that I see with the pork at the present time.
And the funds are very long here, so they've got some length. They could really push this thing, huh?
They can, and if the money tells them to keep going to the shorts or get out of their short or long positions, that's what they'll do.
Okay, thanks so much. That's Mark Schultz, North Star Commodity. That's Markets Now.